All right, here we go. All right, good morning, everybody. Day 2 or 3, really day 3 now. I know, it's pretty cool for those that got here on Wednesday. Hope everybody had a great night and great day yesterday. We've got a lot planned for today. And then, of course, the award ceremony for tonight, which you're all staying for, right? Everybody's going to be here tonight for that too? All right, cool. We have an exciting morning ahead of us. We have an incredible keynote speaker and a good friend of ours. Chris Shepard is here, so we'll hear from him in just a minute. But before we do, I need to once again give a shout out to all of our exhibitors and sponsors who really do make this possible for all of us. So thank you again for Amaretti for sponsoring Wednesday night's welcome party at Common Roots. Direct Source Packaging for being the swag sponsor. There's bags. They do great bags. There's a whole bunch of them downstairs, so make sure you get those some of those bags. Our lanyard sponsor, Cooley Group. Thank you to the Hop Growers of New York for offering the Woman in Beer Scholarship. We appreciate that. All of the beer stations this year are sponsored by North and the Hop Guild. And again, thank you for all the breweries that donated beer. We have so much beer downstairs. So we've got plenty for tonight. And we've been holding back the UCs for tonight because we all know you all like to have the UCs. So we've only got about 32 cases of those. So, but we do have kegs over here. So it's not enough. I know. And this year, Hopsteiner, our first ever hop water bar. So thank you, Heather, for that. TriNet is sponsoring the wellness area. Hopefully you had a chance to go down to do that once again. 10:30 this morning, Sarah Martin will be hosting a stress reduction session. And at 3 p.m., the Cheese Traveler, who's been doing a lot of our VIP events, is doing beer fondue. She's amazing. MMB & Co., thank you for sponsoring the stage. We appreciate that once again. Our lounge sponsor, New York Craft Malt on the first floor. Thank you, Ted. Our official social sponsor, John I. Haas. Our official snack sponsor, GTM, which is located downstairs in the break room. Our apparel sponsor is Viatran. Our glassware sponsor is Bolter. Our signage sponsor is TLF Graphics, and also our presenting sponsor. So thank you always, and again, TLF Graphics. And thank you, Ali and Ecos, for sponsoring last night's happy hour and bingo and all the great gifts. That was fun. And our breakout rooms are sponsored by the USTA, International Wine Center, Van Elstein & Sons, DP Sales Corporation, and Acrisure. So thank you to all of them for sponsoring the rooms. And I did do cardio. I didn't do cardio tennis, but I did go down and see a bunch of you do it. So it looked like a lot of fun. So thank you for everybody that did that this morning. And tonight's reception for the competition award ceremony is sponsored by Heart Print and our very own DJ Cascalot's set. We'll have a little DJ tonight at 5 p.m. Each year we like to recognize outstanding allied member who consistently has gone above and beyond for their support of the NYSBA, but more importantly for the New York State Brewers industry as a whole. This year we recognize TLF Graphics, and we thank them again for their partnership and support. Now it's time for me to introduce this morning's keynote. Christopher Shepard writes and edits. He follows trends and analyzes data for a family of beer industry trade publications from BeerMarketers Insights. He often leads BMI's legal coverage, offers in-depth looks at alcohol policy and science as an editor of Alcohol Issues Insights, and serves as senior editor of craft-focused newsletter Craft Brew News. He frequently presents at industry conferences and plays a key role in building BMI's annual data, reports, and webinars. With his industry experience in so many headwinds and evolutionary changes, we thought he'd be the perfect person to have this year. And he's been a good friend of this association, has been presented before, so please welcome our good friend, Chris Shepard.
Thank you so much, Paul. Good morning, folks. Thank you, Paul, for that lovely introduction. And thank you and the staff and the board for inviting me back. It is a pleasure to be here again. Some of you might recognize me. I have done a handful of breakout sessions in the last few years. It has been a minute since I've done a keynote. It was way back in the day. It was sort of the early days the last time I did it, I think. For those of you that do recognize me, you know I am about to hit you with a whole lot of information at lightning pace. You're about to get a ton of data, a ton of news stories, an analysis, which is what we do at BeerMarketers Insights. But for those of you that love that, and feed on that. Please know you don't need to take a picture of every slide. This deck is going to be yours. My email is at the end of the presentation. If you see me, just give me your card. I'll make sure Paul has it. So anybody that wants a copy of this deck, it is yours. You can just sort of sit back, relax, and let it happen. And really, as Paul said, what I'm intending to do today is to give you a lay of the land, sort of try to share with you what I see when I look out at the U.S. craft beer industry and its place within the broader beer industry and the broader alcohol beverage industry and the rest of the world. No small task, easy, right? And when I do that, one of the things that I've been seeing over and over and over again, regardless of which sphere I'm looking at, is a whole lot of people who are doing everything they possibly can to find a little bit of sanity, a little bit of safety, a little bit of control, a little agency in a world that frankly feels completely absurd. And an industry that feels kind of absurd a lot of the times. Everything just feels kind of out of control, doesn't it? I'm a writer, as Paul said. I have been writing about this industry for 15 years. I work for a company that's been doing this for over 50 years. It is our job, and we've gotten really good, frankly, at giving bad news with a smile. Whether the news is good or the news is bad, we have to tell you the truth about what is actually happening so that you can build a solid base on which to build a strategy and a business. But lately, depending on the solid ground we've used for a long time, the numbers we reported for a long time, this base has felt really destabilizing. Total industry volume. This is a data set that we at BeerMarketers have been working on for decades. We have followed this industry and how much beer is sold in this country year after year after year after year since we were founded. And for a long time, as you can see, for the better part of 2 decades, total beer industry volume was relatively stable, wasn't moving a whole lot. And then the last couple of years, we have seen record decline after record decline. We estimate that in 2025, again, total US beer industry volume was down about 5%. Another couple million barrels gone, another record decline. Now, if we zoom in on New York, because we look at all the state data as well, in New York, things have actually been a little bit tougher for a little bit longer. New York beer volume has been struggling even more, declines going back for the better part of a decade, and another sizable decline here last year as well. But all of these volume numbers don't account for the population change. We have more people. So when we divide all this volume by the number of 21 plus adults in the world, the declines go back further. You can actually sort of tell in New York, some of the declines have actually been driven by population change, right? You face a little bit of a challenge compared to some other states where there's been some population shift away from the state. But as you can see in the green bars here, the US decline in per capita or per person consumption has been going on for over 2 decades, about the whole first quarter of the century. Hooray! Now, to explain that U.S. number in the context of total alcohol, from about 2000 to 2020, the declines in beer consumption per person was driven by a shift to spirits. Spirits was winning occasions, winning consumption by the better part of 2 decades. All of those declines in beer, total, as you can see, total alcohol consumption was super steady, right? A little bit up, a little bit down for, again, the first part of the whole, millennium. And then we saw a little bit of lift, but for the last 5 years, declines for beer is really driven by declines for alcohol. Beer's actually been holding share pretty well of alcohol consumption since the pandemic. But again, these numbers are down. This only goes to 2024. The total alcohol numbers, they take a while to settle out. So I've only got an estimate for 2024, and my early estimates for 2025 is another 5% decline in total absolute alcohol consumption in the country. Again, to the lowest levels we've seen in quite some time. few decades. Again, we can zoom in on New York, and interestingly, and so the state data takes even longer to get to. I'm sorry that this only goes to 2023, but from 2013 to 2023, New York absolute alcohol consumption, right, the amount of drinks consumed in the state was actually pretty even, right? It didn't really move all that much. I would estimate that in 24 and then 25, there was a bit of a decline. So this is share. This isn't, totals. This is percentage of alcohol consumption. And as you can see, beer lost some share, lost over 6 share points of absolute alcohol consumption in the state, down below 40%. And actually, in 2023, spirits became the most consumed alcohol beverage in the state back in 23. It probably picked up some more in the last 2 years, but again, don't know quite yet. But back in the 90s, beer was over half of all the alcohol consumed in the state. And if you look at per capita consumption of beer in New York, we're talking about a decline of about a third since the 80s. Can you imagine if every single adult in New York State drank a third more beer than they did right now? Let's focus on craft. Let's focus on what happened in craft nationally. Well, actually, no, this is in the Northeast. So I'm going to fly through this slide. There are going to be a handful of slides here that I'm going to just sort of put up and then move through. This is one of them. This is off-premise scan data, so this is Nielsen IQ. It's just grocery stores, so no convenience, no liquor stores. Some of you who play in this world might know that New York, chain data is actually not all that valuable because you're missing essentially all of New York City. There's not very many chain grocery stores in New York City that report into this data, so you're missing a huge chunk of sales. And this is across the Northeast, it's just New York. Notice that I have spotlighted the growing New York brands in the top 100. There are a lot of other New York brands that I haven't listed. As you can see, most of them look a lot like the top 10 here with much, much bigger declines. There's some health, some folks are growing, but just last year was as lots of people said, a sea of red, lots of declines over and over. I'll shift to our proprietary data set of craft suppliers over 100,000 barrels. This is total shipments for craft last year. We estimate in total craft declined steeper than the industry, another 6 to 7% decline in total volume. So lost more share, another 1.6 million barrels. That's about the same volume as it was in 2015, whereas there are well over 2 times the number of breweries. In our list of, it's something around 25, 30 companies that are over 100,000 barrels, only 5 of them grew last year, led by Garage. More on that later. Athletic, Deschutes, Georgetown, and Fiddlehead. That's it. Have to point out here for those of you looking at that Tilray number and being like, oh my, that is an apples to apples number. Tilray likes to report their revenues growing by acquiring more brands, but on an apples to apples basis, those brands are declining very steeply. And the main point I want to make here is, as this list indicates, who are all these companies? Through consolidation, through expansion into different territories, whether that's beyond beer. There's plenty of seltzer volume. There's actually a bunch of THC hemp volume in some of these numbers. The shift into high ABV single serve sold in convenience stores. The shift into non-alcoholic beer, which didn't really exist a decade ago. None of that did. And then, of course, as the Garage indicates, lots and lots of more mainstream style lagers being sold. The makeup of these craft totals is not craft the way we used to think about it in 2015. And craft the way we once thought about it is a much smaller percentage of our total craft number than it used to be. Should we put the numbers aside for a little while? Please. And I talked about absurdity and the absurdity of the world, and as I think the last few slides have suggested, this pace of change, this things feeling out of whack, out of control, has actually been the case for a long time already. We have been living in a fairly absurd set of circumstances in this industry for sure, for a while. Our day-to-day is bonkers. and has been. But you have to sell beer in that reality. That is reality. We're not like changing that on a dime. So you have to figure out a way to sell beer. And when I look at how folks are figuring out how to sell beer and other consumer goods in a completely absurd world, I see two basic paths, two general ways to go about it. Nothing is ever just two things. It's usually both and lots of things in between. But for simplicity's sake, two ways. One, feed the absurdity. Feed the cray. Give people a surreal story. Have you seen this? This is the Svedka Super Bowl ad. AI robot lady shaken up. And my high kicks aren't what they used to be. Thank you. Have you, like, a lot of advertising these days is just really surreal, right? Like really weird, really random. But people love that, right? In a wild world, it's like, that makes sense because of course, right? So that's one way to sell alcohol. The other, give them Clydesdales. Give them an antidote. Give them something they're used to. Give them something familiar, something stable, something they can depend on. Budweiser, Anheuser-Busch knows super well the people want the Clydesdales, so give them the Clydesdales. Now, this commercial was in fact absurd. However, the bottom line was Budweiser and Anheuser-Busch understands what that brand's role is, and that giving people consistency, something they can depend on, something that feels familiar, giving them Merca feels good in this wild moment. Now, in craft, we have tipped pretty hard in recent years into selling absurdity, into giving people tools to release into the wildness of it all. These brands, I would argue, are the biggest examples of them. We are going even bigger, by the way. Voodoo Ranger, in case you didn't know, is now over 90% of New Belgium's volume. All other New Belgium brands declined by over 25% last year. As you might have noticed a couple slides ago, that math didn't actually work out for them last year. They were down overall. But brands like this, now Imperial IPAs, there are brands in Imperial IPA that are not sold this way, but brands that are sold this way has taken over Imperial IPA in particular in off-premise scan data, and has taken over the craft segment. We're talking about over 16.5% of dollars spent on craft beer last year were spent on Imperial IPAs. Much of it sold in convenience stores in single-serve cans like this, often for $2 or $3 a pop. You can hit that price point, right? Now, this makes sense though. Feeding the absurdity when you're an alcohol brand makes a ton of sense. Giving people tools to release into the cray makes sense. It's why we also see really fast-growing brands like this. These are some of the other biggest growers in the alcohol industry last year. You have Buzzballs up big double digits. It's the number 2 wine and spirits-based RTD. You have Beatbox and Cutwater as well, who, by the way, are now both owned by AB. AB bought an 85% stake in Beatbox last year. AB is now the number 1 or number 2 player in wine and spirits RTDs because of this. They also have Neutral. Now, feeding the absurdity isn't the only way to go in RTDs. We are seeing RTDs that are giving people, right, a little more stability, a little more calmness, a little more focus and simplicity. These are 2 of the other really big growing brands in alcohol last year, Surfside and Boston Beer's fast follower, Sun Cruiser, both vodka iced tea brands, both hovering right at that 5% ABV mark, right? A little more positioned to compete with beer and standard beer a little more directly. So we're seeing both in the world of RTDs. We're seeing absurdity, we're seeing simplicity. But when I look at what else is growing in alcohol, the other sort of big growth category in alcohol, we have to talk about non-alc. And non-alc for me, this is another of those slides that I'm just going to sort of zoom past, but non-alc to me is about giving people a tool to help them feel like they have more control over the only thing they have control over in this world, and that is their bodies, right? One of the reasons I think this category has taken off is because it's giving people a way to say, you know what, no, I have control to say I will not have a drink today, but I still want something that gives me the cue, something that gives me the flavor, something that gives me that experience, a way to participate with the crowd that is out having fun. This is now table stakes, by the way. Many of you are frankly on-premise operators. You operate tap rooms, pubs, bars, places where people gather. Having non-alcoholic options, whether you are making them or a friendly local company or some other company is making them, is now table stakes for those experiences, as far as I am concerned. There are so many consumers that want to have this option to feel like they can have a little bit of control. You can do both. Oh no, I'm sorry. I skipped a couple slides in my head. You don't have to go to no alcohol to offer simplicity and stability. There are plenty of just straight up beer brands that are doing fine, not by offering absurdity, but by offering consistency, familiarity. One of the biggest growing beer brands last year was Guinness. Guinness grew by mid-single digits in all last year. That's a huge win in a down 5 industry. Guinness kegs at the end of last year were up 25%, like July to November. July to November, who's buying Guinness in July to November? Turns out a whole lot more people these days. And in craft too, there were craft brands. Remember, 2 of those top growers in craft that I mentioned a few slides ago were Georgetown out in Washington and Fiddlehead from Vermont, both of them offering consistency and stability. Georgetown is sold almost exclusively in the state of Washington. Fiddlehead has slowly moved south from their Vermont home base, but they've done it almost exclusively with a very, very, very tight portfolio. It's almost all Fiddlehead IPA. It's not just that they're offering consistency, stability, and simplicity to consumers. They are offering those things to their customers, wholesalers. To sell craft through wholesale these days, you've got to offer simplicity and focus. If you do not give them a very clear plan with a very tight focus, it probably isn't going to work, because that's what that tier craves and needs right now. More on that in a minute. You can do both. I would argue that Garage Beer is offering a very simple product, very familiar product, beer, by selling horse shit. This was their regional Super Bowl ad that you may or may not have seen. Garage Beer reached 220,000 barrels last year. That's bigger than New Glarus. That's almost the size of Stone, out of nowhere. Not really nowhere, but I'm pretty sure this is right. I really should have double-checked myself before I put this on the slide. I am fairly certain they were the number 2 volume grower as a supplier in all of beer last year. Not craft beer, in all of beer. Price comes into play here. Price is a part of this world. They are playing up against, they don't like to say that they're going for Mich Ultra, but they're going for Mich Ultra. Mich Ultra has had the $30 a case space to itself for years and years and years and years. So selling, the thing that I want to make sure that you recognize is that if you're going to offer this simple thing, if you're going to say, it's beer, it's simple, right? You know this. Here's a more delicious version of it, or here's a version of it that comes from a local company, or whatever that sort of hook is. Price is a part of the factor as well. As we all know, affordability is on everybody's minds right now. Consumers are pressed. We can dig into that more if you'd like to, but in the meantime, I'm going to say that in my estimation, what you folks do, what most of you folks do, offering tap rooms and brew pub experiences, are also have a really good opportunity to offer both. To offer both feeding the absurdity and giving people safety, consistency, stability. Now, craft has been a source of creativity and wackiness for years and years and years and years and years. Of course, this, you might recognize this guy, maybe you don't. This is Alan Newman. He's the founder of Magic Hat. Magic Hat, sort of one of the OG, like, everything's wild kind of brands. And one of the most wackadoodle humans I have ever met in my whole life. So I was like, oh, give me Alan Newman's wacko face. Been doing it forever, even though Magic Hat, rest in peace. Mostly. Completely? I think completely. But tap rooms and breweries have also offered a consistent, stable, safe place for their communities for a long time as well. And I think that really, when you get to the heart of a good pub and a good beer, that's what it's all about. Giving people a safe space and a safe tool to sit for a while and get away from the cray and just relax. Have a beer with a friend or a family member or a coworker or, holy moly, even maybe a stranger that happens to be in the same space because they share community with you. As you walk away from here and think about ways that you might be able to do both, right? How can I offer releasing into the absurdity and a little bit of stability? Think about ways that your portfolio might do this. Do you have options in your portfolio that serve either need state, if we're going to use a big fancy marketing term? How can your space do this, right? How can your actual physical brewery and pub space offer spaces or maybe times when the space helps people release into the absurdity, have a little fun, have a little party? Or where are the spaces where they can find a little bit of safety, find a little comfort, a little quiet? How does your service do this? And especially, how does your event programming do this? Are there events that allow people to party? Are there events that allow people a little bit of calm? It's a blank screen. No, here are words. The thing about feeding absurdity, though, is that it can work on a marketing level, right? It can help attract people to your brand. It does not work at all as a go-to-market strategy. When you are talking about how are you going to sell your brand downstream of you, absurdity is not the way. The only way is simplicity, focus, stability, consistency. And as I mentioned before, part of that is because if you are going through wholesale right now, there's no other way. We are seeing among the most disruptive, I'll call it probably the most disruptive period in alcohol beverage distribution in this country since Prohibition. Things are shaking up really, really fast. Now, we've been watching consolidation in the distribution tier forever, and I will try to move through this slide super quickly. I know plenty of you don't give a hoot about distribution, and good for you, friends. If you are the kind of person, if you run a brewery that does care deeply about distribution, please come and find me. Let's talk more. I'll tell you all the tea on how absolutely wild things are right now. We can sit for like an hour and just go deep. But for the rest of you, let's move through this rather quickly. We are seeing waves of innovation complicate distributor warehouses and portfolios, right? There was craft that got wild, and then there was hard soda, and then hard seltzer, and then RTDs, and now hemp-based THC, and just the number of things is crazy, and so distributors are only focusing on what's growing at that moment. That's not craft, that's not you. Sorry. Probably. Some of you, definitely. But as a category, no. The rule in beer distribution and wine and spirits distribution consolidation forever has been the big get bigger. We are seeing the biggest get even bigger at this moment. We are seeing even more massive change in wine and spirits distribution right now. The number 2 player, a $12 billion company, essentially imploding before our eyes. And the largest beer distributor in the country, Reyes Beverage Group or Reyes Beer Group, always get it mixed up, expanding into spirits much more, and the largest wine and spirits wholesaler in the country, Southern Glazer's Wine and Spirits, getting into beer much more. You might have noticed that after buying AB's New York City branch last year, they bought Claire Rose in Long Island this week. That happened like 2 days ago. They announced it. There is almost certainly more coming. This is a huge, huge level of change. The bottom line is selling beer outside of your brewery is harder. There's just less space for it. Right now. That could change. But right now, it's hard to do that. You, of course, don't have to leave the four walls of your brewery to experience difficulty, to feel the pressure, to feel, frankly, absurd circumstances, namely cost increases. And the thing about the fact that costs have gone up and up and up across the board for you and in just everything that you're doing, there's less pricing power for beer generally. Beer, for decades, beer prices in this country sort of grew with overall inflation, was able to track. Spirits prices, by the way, were kept relatively low comparatively. Shh, don't tell anybody, okay. That has changed. In the last year or so, beer has not been able to keep up with inflation. It is basically a signal that consumers are like, no mas, as my dad would always say. My dad did this job for 40 years. It's the reason why I do this job now. He's retired now, he's doing great. But when we would talk about this sort of shift, it's like, no mas, I can't spend more on this beer. We have reached that point. And that's really hard when there's cost rises across the board. Therefore, if you have not gone to Audra or Chris Fremond or one of the very many very smart numbers people and sharpened your pencils to focus on what your margins are and what your profits are to make sure that you are operating profitably every single day, friends, go do that right now. Maybe don't stand up and leave right now to do that, but in a couple of minutes, then when it's a little less conspicuous, seriously, if you've not gone through this process yet, it is the most essential thing that will keep your business alive, period, full stop, doesn't matter what's going on in the rest of the industry. We are seeing model changes, though, to keep the top line growing, right? Your on-premise businesses, and I think a lot of tap rooms are finding that just draft beer, just on draft in a tap room, might not be enough to keep folks coming back and to keep those butts in those seats for as long as possible. So we're seeing a lot more breweries get into food. We're seeing a lot more breweries get into other options and focusing on ways, this is all sort of little insights from Arrived, which does POS for tap rooms. You probably know that, on how do you make the most of that on-premise business, right? These are some strategies. The thing about food, though, it's essential to keep people around at this point, but the margins are also really hard. So again, you need a very sharp pencil. It's not just service models that we're seeing tons of breweries shift up in order to try to find a more profitable, a more stable forward movement. We are seeing lots of business model shifts as well. Last year was a record year for craft-on-craft deals. Not all of them equity deals. Actually, a lot less of them are equity deals at this point. A lot of them are sort of shared service models, just small companies trying to find a way to how can we help each other out? Which makes a ton of sense. There is also, of course, a ton of capacity out there. So we're seeing a lot more contract brewing, but the fact that there is so much capacity means that competition for those contracts is really stiff. Really stiff. More challenges. I do want to say, you might have noticed way back in this presentation that some of those large-scale roll-ups, right, companies that are I'm going to buy a whole lot of craft brands. That makes sense, and then we'll sell them together. That hasn't worked out for a lot of companies. AB bought a whole lot and was like, okay, actually, we only need these. The rest of these, here you go, Tilray. And then Molson Coors was like, we're going to buy a whole bunch of these, and then actually, we don't want any of these. Here you go, Tilray. And the thing about those deals, and there are plenty of private equity companies that have not made, it hasn't, those investments in putting a whole bunch of brands together hasn't panned out the way that they thought it would. And the thing is, Tilray bought all those brands, including BrewDog, like a week or two ago, or whenever the heck that was, for like cents on the dollar compared to what those valuations were before. These pulling together of multiple brands make a ton of intuitive sense, right? It should make sense. We have a lot of shared costs that we can now split up between us, and so like simplify that, and then we can like go to our distributor all together. That makes a lot of intuitive sense. Executing it, actually making it work is a much different story and is much harder. I'm not saying it's not possible. It is definitely possible, but it's hard. So if you're going to embark on shared services, on agreements with other brewers, just make sure you are doing this with eyes wide open, with very sharp pencils, and very good communication between all of the parties to make sure that your interests and your execution is aligned. One of the ways that I have been viewing all the closings of the last year is that, like I mentioned, Tilray bought these brands for cents on the dollar. Craft breweries, I am so sorry to tell you, if I am the one who's breaking this to you, aren't worth what they were a decade ago. Just the value of the businesses isn't the same. And so one of the things that I think we're seeing is a whole lot of people who have opened these businesses getting excited about evaluations and then realizing, oh no, this is really hard and that my business was, bye. Here's the thing about absurdity. Absurdity is great for the media, says a guy from the media. Living in a world of absurdity leaves a lot of room for false narratives to emerge. People are moving fast. They're scrolling. The headline's all that matters. How often are you clicking through and reading the whole thing to see how much proof there really is to defend this statement? It's hard. We don't have time for it. I've got like a billion things to do. And so it creates an atmosphere that is ripe, like I said, for false narratives to emerge. And that is another thing that this industry is currently combating. There are a lot of false narratives out there about this industry and about alcohol. The first one I want to talk about hits much closer to home. Craft beer isn't dying. Shut up. We know this. Yes, more breweries are closing. Lots of people are saying, actually, this is hard. And, oh, my landlord's a total, so I am forced out, right? Sometimes it's their choice. Sometimes it is not their choice. We all know individuals that have had to make this very difficult decision in the last year or two. We all do. It's hard, and like I said, sometimes it's like you know what, actually this is hard. Sometimes it's literally those outside factors, right? You get one really crappy landlord, you get, construction on your street that has, made it difficult for people to actually get to your parking lot for 6 months, 8 months, a year, right? Like, some things are totally beyond your control. This does not mean that the industry is dying. Get out of here. Restaurants, Bart Watson has talked about breweries as a little bit more like restaurants and bars since he got to the Brewers Association. Restaurants close all the time. Restaurants aren't dying. Although the New York Times sort of tried to claim that earlier this week. Anyways, the point is, my basic point here is, don't believe all those narratives that you read on the internet. I don't need to tell you don't believe everything you read on the internet. You know that, duh. Yet we all sort of do it sometimes. We're all sort of guilty of it. We're all guilty of sort of allowing that narrative to explode. Because here's another one that's actually been started to be debunked pretty well in the last year. Gen Z drinks, friends. Gen Z definitely drinks. Now, a lot of the ways that this story has been debunked has been sort of useful. One of them is sort of like this, the technology thing, right? This is Gen Z that's sort of grown up under parental surveillance, so they weren't drinking for a long time because, like, their parents knew where they were at all times. They couldn't get away with the kind of things you and I got away with. There's also, really importantly, the whole money thing. Gen Z spends about the same amount of their income or disposable income on alcohol as other generations. They just don't have the disposable income to spend very much on alcohol. Both of those things will change. For me, what I think about when I think about why Gen Z is sort of showing different patterns and drinking differently, I go to underage consumption. This is federal survey data back to early 2000s. Those top lines are important. We'll get to them in a second, but pay attention to that orange line at the bottom. That's 12 to 17-year-olds. That's teens. That's the percent of teenagers who've consumed any alcohol in the past 30 days or so. It has dropped by 50, 60, 70%, depending on the age group. The decline is a little bit less among 16, 17-year-olds. It is huge among 12, 13-year-olds. Friends, this is an enormous win. Teens aren't drinking the way that we did. Good news. Good news, I promise. But these folks who have showed this decline in teen drinking are Gen Z. We told them not to drink. They didn't. They listened. Cool. Now they're in college, now they're 20, and they're like, what is this? Pay attention to those other lines, though, because 18 to 25-year-olds, as you can see, a couple decades ago, 18 to 25-year-olds, they were our most reliable drinkers in this country. College students, folks just outside of college, they were the most likely to be the ones to drink. That has declined in recent years because actually college drinking is down too. If we zoom in, though, on those age groups, this goes back to older data. But what I love about this chart is it shows that there's a lot of consistency among 21, 23, 25-year-olds drinking. The prevalence of age drinkers choosing to drink has actually held pretty stable. The declines have been among underage drinkers. It's a win, friends. But it's a challenge. We don't have college students going out. Pause. We absolutely have college students going out and getting schwasty pants on the weekends. We do not have as many college students. We actually have significantly fewer college students going out and choosing to get totally schwasty pants on the weekends. Again, this is a win, but it is a change. It is a challenge. We are also seeing huge declines in the number of adults, especially young adults, reporting binge drinking, drinking dangerously, getting schwasty pants. Again, that's a good thing for this industry. We are seeing more people think more carefully about what their consumption looks like and how it happens. Again, especially younger people. The millennials, we were famous for binge drinking. Not only were we the biggest binge drinking generation in college at the turn of the millennium, we continued to do so into our 20s and into our 30s and are now saying, actually, I can't do that anymore. What all of this means is the challenge of selling alcohol to younger legal age drinkers as they turn 21 is totally different. You're not talking to an audience that has been drinking for a while and now is going to choose, right, might be rolling back that consumption and thinking about how they want to do it. You are talking to people who maybe have not been consuming at all. That conversation has to be different. And the industry writ large, not just craft brewers, but the whole alcohol industry is honestly just starting to figure out that this challenge is different. Here's another false narrative. This one, if you know me, drives me a little batty. I spent a huge amount of time on this no safe level of alcohol consumption, and I have got to start wrapping up. Oh, look at that. We started so early. Thank you, Paul. Thank you. I can dig in for a hot second here, more than I thought I was going to be able to. This started to get a lot of press a couple of years ago. Everyone focused on the WHO statement that came out, I think it was 23. If you, like me, have been paying attention to these conversations for a whole lot longer, you know that was not news. This has been going on, and this narrative has been building for many, many years. It was 2018, the first time WHO-aligned folks sort of put that no safe level language in print, but it had been building for about a decade at least before that. These are some of the headlines that we see. New York Times especially. Here's the problem. The story is a whole lot more complex than those headlines would have you believe. Part of my job, what I do at Alcohol Issues Insights, you might have heard Paul mention, that's the publication that I'm the editor of for BeerMarketers Insights. Alcohol Issues Insights, I look at these studies. What I do is when those headlines come up in the New York Times, I say, cool, thank you, New York Times, citation, research paper, buy the research paper, read the research paper. What does it actually say? And we see time and time and time again a gap between the rhetoric that is being used to share the results and what the results actually are. We can get into why that happens. That's a better discussion for off the stage. The thing that I want to drive home, though, is that the community of researcher advocates, they do a little bit of both. They are the researchers, but they're also sort of advocating for their research and for policy changes. It gets very confusing. They've been so focused on trying to debunk that whole, like, a glass of red wine's good for you thing, right? That drove them so batty for decades that they've been really focused on trying to get rid of this notion that moderate alcohol consumption is actively, quote unquote, good for health. That they've forgotten that their rhetoric really also needs to show that it's actively bad for you, and they can't. Paper after paper also shows that moderate consumption doesn't have a net negative effect either. It's sort of a wash until you get to much higher levels of consumption, maybe the kind of consumption that, I don't know, I did yesterday. Shoot. But at 4 drinks a day, 4 beers a day, if you're doing that every single day, that's when things start to get bad. But before that, i.e. the kind of consumption that as a country and frankly as an industry we have recommended, keep it to 1 or 2 drinks a day max, you're good. The real bottom line, and I was expecting to sort of skip all of that and just jump to this, that I want you to take away, is something that I think we all basically understand. Alcohol has 2 sides of the coin. There's a good side. We love it. It makes us feel nice. Makes it easy to talk to strangers. Good. Bad side, too. And if you are sitting here and you do not recognize or have a respect for the harm that alcohol can cause, I have no patience for you, and kindly get the fuck out. I have told you to leave multiple times during this presentation. What am I doing? Okay, sorry. I get passionate about this. But it comes with both sides. And a conversation about alcohol requires you to recognize balance. It requires a complex conversation about, we've got to see both. But here's the thing. In our what I like to call flat and fast world, you can't see both sides of the coin at the same time. Taking that time to slow down and have a careful, considered conversation about a complex topic that requires nuance is hard. It's much easier to put a quick, flashy headline out there that people scroll by and say, "Oh, noted, move on." We are all forced constantly to be pulled on to the next. It's not just our digital worlds where we're going. It is our lives when we are going. We've got another job to get to. We've got to get to the gig. We've got to pick the kids up. We've got to get dinner on the table. It's constantly go. There's always another thing for us to do. And that is cultural at this point. That is our culture. There is also an economic imperative there. I have got to get to the gig, to the thing, so that I can pay for the place to live and the foods on the tables. There's an economic imperative, and I haven't even talked at all about the macroeconomic pressures that the industry is feeling right now, and they are real, right? Affordability is tough. People don't feel like they have the money to pay for more things. But people found plenty of money to buy energy drinks last year. Energy drinks grew double digits last year. Energy drinks are taking space at retail and occasions from beer. Just ask the executives at Monster and Celsius. So the tools that help people feel like they can keep up and keep going and go on to the next and run and move and go faster and faster, those people will spend the money on. But a tool that encourages them to slow down, maybe not. So is it that they don't have the money for it, or they're just not valuing the experience of slowing down? Is it that they don't feel like they can afford the time to have a beer in this absurd world? You all have taken the time to step away from your businesses, have spent your time and your money to come here to connect with other members of your community, to learn, to commiserate, to talk about the challenges that you're facing and try to find some kind of solution to face them. Even though taking that time away, spending that money to do that is hard. We all have a sense, though, that spending that time and money to do that is actually in the long term good for us. As an individual and as a collective, we recognize that taking days like this are actually worth it. I think that humans who have been consuming alcohol since before we were humans, by the way, have an intuitive sense that taking a second to step away from the daily grind, come together to connect, to commiserate, to learn with community members, is in fact good for them. We know, we have this sense. We've just forgotten in this absolute batshit world that taking that time to slow the heck down and connect with our communities is good for us. We know this. We have an intuitive sense of it. We just as an industry need to help people remember that. And that's starting to trickle up. We have seen in the last few months especially, this is getting a little more attention finally. There are finally more people that are saying, cello. Can we just chill for a second and go out and talk to each other? Have a beer? The industry is trying to do this writ large. The powers that be in this industry are working on how do we remind people of this. But if you ask me, who started doing this job 15 years ago, solely focused on craft beer. I started in the job, and the only thing I did for 5 years was write about craft breweries and opening. And opening because they felt like they could be community gathering places. If you ask me, small brewers are perfectly situated to remind people that taking a moment to slow down is good for them, are perfectly situated to invite people into their safe, comfortable, stable, consistent spaces, to have those hard conversations that require nuance, to break those false narratives, to connect with community members. They are perfectly situated to invite people to say, hey, slow down and have a beer with your friend or your family member or your coworker or, goodness gracious, maybe even a friendly stranger who just happens to share space with you because they share community with you. Small brewers are perfectly situated to do that work. It is work. But if you ask me, you've got a better shot at accomplishing that goal at the scale that is crucial for you in your communities than just about anybody else. Thank you, folks. Thank you.
Thank you so much. Thank you, Chris. Amazing. I've seen you do a lot of speeches, and that one was really great. So thank you for being here. We really appreciate it. Right on point. All right. We're wrapping up here. The one thing that I also failed to do, and Hutch did this, reminded me yesterday, is to thank the conference committee for all of their incredible hard work putting the sessions together for you to go downstairs and learn all day yesterday and all day today. So thank you, Mika as the chair, and everybody who's involved with the conference committee. So thank you. We really appreciate it. One schedule change at 11 a.m., boosting taproom revenue and with private events is canceled. Apparently the speaker had a baby this week. So that won't happen. But all are on schedule. Everything else is. And the exhibit halls are open. Please visit all the exhibitors before the next session. Thanks, everybody.